Full screen. All right. Well, this one's on me. I'm going to have to apologize to the community. I'm about 10 minutes late. 4 p.m. UTC. Got it. Messed that one up today. Apologize for being late to the community and the team. Oops. But we do have a good one going on today. We have FAF APY exploding and a little controversy with a proposal. But lots to get into today and some interesting developments for sure. State of the trenches. All right, so if you're just funneling in now, the way this works is we have State of the Trenches. That is the first segment that we get into. That's to allow everybody to grab their coffee, their drink, sit down, and enjoy the next hour with Flash Trade, catching up on all the latest and greatest. Then we move into Flash Overview, where we just highlight something that something great that happened in the community or on the platform. And then we move into what happened this week and what is coming. We finalize it with what is coming down the pipeline. Good morning, sir.
GM everyone, I was just trying to get things in line because we already had started a call on Discord, and yeah, hope everyone is up and energized for a very interesting flash hour.
I finally got rid of those white lines. It's actually what I was doing is I was trying to get rid of these white lines that have been on the slides. So we did it. We got it. Figured it out. Now, no more white lines. It looks a lot cleaner. But let's get into the first slide, which is State of the Trenches. So Ondo launching direct mint and burn for 200 plus assets. But I do want to mention there is a great article by 609.sol that talks about the difference between what Ondo's doing with their kind of RWA markets and then what Remora is doing, as well as there's another one I do. Oh, X stocks. I apologize. And yes, how they're more permissionless. So
yes, I think the way Ondo has launched it's a very neat architecture where they're just directly allowing us to mint and burn using their broker services that is directly linked to the markets. And yeah, very lovely to see the way they have launched. But I think they kind of went ahead of themselves with it, but eventually things will catch up, and we are also looking at how best we can use the tech itself of minting and burning. And I'm sure there is something in line, and we've been discussing it over the weekend on what interesting can be built using this direct mint and burn mechanism that is built over the Jupyter API. Basically, the Jupyter API does the stuff for them, and then they have the connection to their broker. So very neat implementation overall. And even Remora was working on this thing as we speak, because we've partnered with Remora. I'm sure a lot of people know this, and I was having discussions with them, and this is the thing that Ondo launched is something that Remora was working on, and they have a stated timeline to commit something in a month or so. But eventually, this direct mint and burn mechanism with the broker itself is the most neatest implementation for real world assets, because you don't need to have your own AMM and then manage liquidity and then eat up the impermanent loss. So very interesting stuff.
Yeah, is that basically just because it keeps price closer to what the real world asset actually is priced at, instead of like price discovery that happens with?
You're basically minting from the market itself. When you are doing an AMM thing, the liquidity is just stuck there. It needs to move, so it will always have a huge impermanent loss, and you can never have X amount of liquidity available for 200 assets. Imagine even if you're adding $2 million worth of liquidity for each asset, it's like $400 million. That's bonkers.
Yeah, that would be a huge ouch, massive liquidity pool, and probably realistically not possible, or maybe not even not possible, just unrealistic.
Yeah, it's unrealistic. We need BlackRock for that then.
Yes. All right. And then metals breaking all-time high. It actually kind of breaks my heart because I used to own what they call with the silver market, a green giant. I don't know if you ever heard of that. It's the tokens, but anyway, the green giant, it's like I don't know, 200 ounces or something like that. But I used to, I bought it at like $16, and like a dummy, I sold like when it doubled. But now it's like all the way at 100. I'm like, dang it.
Insane.
Pays
But yeah,
to hold.
we are seeing insane amounts of volume that is being happening on silver, on flash. Even if now you can check, it's about $700,000 in the past 24 hours, and the pool itself is also up by about 6% since we have added gold into the pool. And the looping has been working very well, because essentially you're looping the most precious metal, that is gold, which is also going up.
Mm-hmm.
So all in all, the addition of uh, gold to pool 2 has made things very well for flash. And even the tvl has risen. Like, pool 2 used to have an average tvl of about 200 to 300k. Now it's sitting at 1.5 million. And we are currently discussing with loop scale to make things much more smoother, to get the looping much more faster. And the circular economy will grow on its own as metals rise much higher.
Yeah, the fluke mechanism's really working out well for pool 2, which is pretty awesome to see in real world and real application. And then pool 2, came in. And this is honestly the foresight of Anas and I guess probably just Anas actually was pushing so hard to add RWAs and metals. So kudos to Anas. So he's a visionary. He could really see the future before the rest of us are kind of thinking he's absolutely crazy.
Seeing is one thing and implementing is another thing. So yeah.
Yeah, absolutely. Just a big shout out to Anas for that. That was unforeseen future events where gold and silver and metals are going absolutely nuts. He actually called this out I don't know. This is a while ago you called this out saying that this would happen. Crypto markets looking weak. They are. I think it's no surprise to anybody here that we're going to say that, most altcoins are down 80-90%. Some strong, altcoins are still holding in about 70%. But, those are few and far between. Your layer ones, and Bitcoin, of course, is really holding up the market if you were looking at it as an index. But overall, Coinbase integrates with Solana, so a lot of positive news actually for Solana, believe it or not. I mean, obviously not reflected too heavily in price, but just overall the adoption is insane. So if you've really kind of like taken your eye off the ball and just tuning in after a while of being away, and this is maybe your first one, Solana is absolutely being adopted everywhere. Coinbase just integrated it to essentially get access to the millions of tokens that are on Solana. And there are so many other things that are happening. Ondo Finance coming on. Kalshi's like, I don't know, partnering with everybody. You got Poly Markets and everybody else are coming on Solana. So it's pretty nuts. And then Etherfuse, the Korean stable bonds on chain. So they're actually more RWA news. So we're bringing bonds on chain, which is pretty wild. Doodles, if you've kept up with anything NFT, which probably most of us have not, just being honest. But Doodles rolled out a Solana integration with called Studio, which is cool. I still love NFTs, even though they're absolutely worthless now. Still love NFTs. Still keep up with NFTs. Certain projects that I love, like Monkey DAO. Always going to be a monkey. Pre-stocks volume has surpassed 100 million. This is pretty cool. I like the application itself. Just the fact that you can get access to pre-stock, was it IPOs? Pretty interesting. Thought that was neat.
Yeah.
I just found that out, by the way. Sorry if everybody already knew that.
Yeah, I think the next important thing is the yield on JPY T-bills is rising. And I think since they already hold the largest amount of US Treasury bills, which are not yielding as high as the Japanese yield bills, there might be a shift where Japanese have to sell their US bonds, buy their own bonds. So that would trigger a very different narrative for the whole US economy itself, because when you have this much amount of loans that are actually being paid by the government, and then someone with their own, like Japanese have to force sell their US T-bills to buy their own
Yep.
T-bills so that things work out. It's a chaos in the markets, and that is the reason why we are seeing metals breaking out, because there seems to be no safe haven asset as of now except for metals.
Yeah.
And we really wanted Bitcoin to be in that place, but we are not seeing as of now. And yeah, crypto markets are looking weak, but essentially we might see a rebound, but yeah, fingers crossed as of now.
Yeah, the narrative going around right now is that there will be as people are finding gold to be toppy, the rotation of capital is going to come back into that. That's the
Max,
narrative. I'm not saying
you have to
it's true.
understand, there is no top if there is no belief in the fiat system. Just
Yes, there is no top to gold. There's no top to safe assets, though. I still believe that now institutionally, I think there will be still a rotation into BTC as they see that as certain jurisdictions become, because I think what's going to happen, this is just my narrative that I'm painting in my head. If I'm a big country, like now, obviously Japan's onshoring, like they want that capital back into their markets. Obviously, that's why they did that. The problem is it's going to hurt the US, but now we're going to see like capital flight. And as countries become a little bit more despotic in their approaches to keeping capital, the problem is that with gold, how exactly do you ensure that you keep that, like you keep your gold? I think BTC becomes more and more, it becomes more of an option as, institutions, people, individuals, larger firms see that BTC could be the answer to that. But
easier to
we'll have to, yeah,
Bitcoin then.
much easier.
Yeah, but another thing was, like, during this whole chaos, like we've been having conversations internally, and I was asking Zeb, would it be possible to swap all our USDC for gold and use gold as collateral to trade anything that is on Flash? And that was like epic. This is actually possible because of flu mechanism,
Flu.
where yeah, flexible lock utilization, which was launched under the phase 2 mechanism of margin engine V2. So imagine dollar was to be dethroned, and there was a question to have a new reserve currency or a new baseline that could be gold. Then Flash is ready to make that change as well.
Yeah, it's kind of funny because it comes full circle. It goes back to gold. Jeez, I've done. Thanks, Nixon, for taking us off the gold standard. Awesome. Well, won't belabor that point, but yes, I do see a narrative actually switching into BTC. Maybe, don't know when that will be, but I am a firm believer in that. All roads lead to Bitcoin.
Max, I think what I really want to do is, like, let's jump on to the proposal itself first, because
Sure.
we have a lot of people who have joined us. So, and then we'll go back to things. We don't want to keep everyone holding. So
No worries.
yeah, people can read this thing. So yeah. So the team had intense discussion over the weekend. Everyone on the team were reading through all the messages that were happening in the Discord channel under the Flash Labs, and they really didn't want it to hurt anyone's trust in the foundation that we have set up so far. And the major concern was about aligning people and making sure everyone are future proofing as things grow from here. So the 1 year lock thing was more of an attention grabber thing than it was to be real thing. We really wanted to see how much livelihood there is, and then people are aligned with us was also a very important message that we really wanted to see. And we are very happy that all of our chat beasts and the majority of holders didn't budge from that proposal. So yeah, hats off to the trust that they have. And yeah, the next thing that we really want to go ahead is with the proposal is now moving to be a lock-in proposal, where now you could just withdraw instantly with just 3% penalty. So we are making a different change over how you withdraw. So basically, we are looking to add a linear vesting scheduled unlock mechanism
Yeah.
where whenever a staker tries to withdraw, they just put up a request, and then according to that request, your tokens unlock over that amount of period. And now we are currently just discussing, should the period be 1 month or should the period be 3 months, which is subject to approval of the community, which we'll do that in our Discord. But overall, we're just stepping back from making this a futarchic proposal because it's not about revenue. It's just about how the mechanics of the locking works, and making just things future proof is what I'm telling. Like, the thing right now what we see is, like, imagine if something goes, just a speed bump happens where people are not aligned, and so the people who are just getting revenue, they can come out anytime and just sell their FAF, which is kind of not aligned with the vision what team is working towards. So just to make sure we don't have that instant unstake and sell over the market, we want things to move a bit slower, because as things progress, we hope we can deliver much better value for your stake and your belief in our delivery of things. So yeah, this proposal is now shifted towards having a linear vested unlock whenever a staker withdraws, rather from the whole proposal of forcing like we forcing you to lock for 1 year and then nothing, which was kind of in between. So yeah, we'll follow up with more details in our Discord, but this is what we have landed at after the intense discussions that we've had in Discord so far.
Yeah,
And
it's
if you
kind of
have
spicy, huh? That was
yeah,
good.
and if you
I really appreciate, just real quick from the janitor, I really appreciate everybody's input. This is how we get things done. I mean, it's the wisdom of the crowd. The wisdom of the crowd, especially when Flash Labs is kind of like our top supporters. People have been here since literally day one, or people who are largely invested into the Flash trade protocol. So our platform. And that I just really appreciate everybody's calm, discourse. It got a little heated at times, but this is how we work it out, and we make sure that the best proposal moves forward. So it was great. I was very much so paying attention, by the way,
Yeah,
holding back a lot of my thoughts until the end.
absolutely. I just have my 2 cents on this whole thing, since I've reserved my comments in the chat as well. And we kind of have this idea of solving problems from an engineering perspective. Of what target are we trying to achieve, and how do we end up solving it? And I think that the idea of the proposal was to revisit the whole revenue distribution system that FAFtarchy proposal 1 or FAFtarchy 1 kind of proposed. And I think that was a natural course of progression which we took. And I think one of the primary things that was a concern was liquidity hitting the market anytime, and then people who were enjoying the revenue distribution just moments earlier now coming and hitting the market, and just finding an easy exit. So I think that is where we're trying to find a right balance. And I think the longer end of negotiation started to have like a 1-year lock, which does seem like exaggerated in terms of how people have been seeing it as a penalty on them for believing in FAF. And that is where I think we've drawn the common ground and said, okay, instant withdrawal seems to be the biggest trouble, because 3%, 20%, 10%, whatever number we put in there seems absurd. Like there's no justification of having not having 100% penalty all at once. And for that reason, I think that is another part of the whole thing which we want to get rid of. So from all of the conclusions that we have come across, and all of the discussions that we've concluded with, one thing that stands out is that the instant unlock feature needs to go. And this kind of comes in as a replacement, as we see a linear vesting unlock. And the terms are to be discussed. I think we should come to mutual consensus on what works out best. But the whole idea here is to make sure we find the alignment that we've been talking of, and not to be subjective on what alignment means here. So the thing becomes a lot more linear now, a lot more palatable as well, without making the system a lot more complex for people to understand. So that's the middle path we've concluded on, and I hope the community also finds consensus with this structure moving forward.
Yep.
Yeah, couldn't have said it better myself.
Yep. The most interesting thing was like all of the community members understood that there was some sort of misalignment with people allowing people to withdrawing their stake instantly, and 3% is nothing in compared to whatever that is going ahead, and with the market cap being so low. So the idea is to just make things bit stretched off so that it's bit more predictable for other people when they're coming in or coming out. Like, see, if there is a linear vesting unlock that is happening, and then there is a dashboard where people can check what is going ahead with this much amount of supply that is logged, then there is more confidence in the people who are coming in or going out. It doesn't matter. So this linear system basically, answers all the problems. And see, even as as builders, we will do mistakes all the time, but we need more conversations to happen. And as more conversations happen, more ideas are shared, and then you get the best thing that is possible in the mechanics side. And that is what happened
100%.
with this. Like, we shared this thing, we've got a lot of feedback, a lot of negative comments as well, but eventually, this actually helped us to discover what best can be done. And that is why conversation happens in Flash Labs. And I've also actually made this clear as like Flash Labs is like basically a place where we temperature check proposals. It does not mean we are putting a proposal right away.
Yeah, exactly.
So, yeah, I hope a lot of things are cleared, but if anyone has any questions regarding this thing, please ask us right now. I am just looking through comments if there are any comments on this, but yeah.
We got one comment here from Some Digits. The reason's the most handsome community member. I wonder who that is. Some suggests. That's funny. Yes. Yeah, we took that into consideration, but the exit tax in general is kind of the crux of the whole issue. We just don't. It doesn't invoke confidence that somebody can just dump on you instantly for seemingly really no reason. Maybe they're in maximum profit, and all of a sudden they get their, their distribution of FAF, and they get their RevShare for that day, and then they just dump on everybody. So that's kind of the mechanism that we all decided in Flash Labs. Which, by the way, if you're not in Flash Labs, seriously, get staked, get in there, share your thoughts, share your feelings on it. Just a few things here. GM Simon, appreciate you showing up. Muds, GM buddy. Big Combo, of course. And then Cyber Broda, GM to you as well, sir. And then he had some comments on Sol. Yes, Sol's being doesn't, utilization doesn't reflect price. So yeah, that's definitely very, very true. That's kind of always been the case with Sol, though. Hopefully the next RIP makes us all makes up for all the downtime. I hope so too. All right. And let's did you guys end up with everything on this, or did you want to cover anything else?
No, I'm just waiting if we have any questions to go through here regarding the change in tone over the structure itself. And then I think there is a bit of confusion among community that Flash Labs is something else. So I was just trying to clarify that Flash Labs, since we started, and if you check even in documentation or in the post, it's a place where people can put up temperature check proposals, or like anyone who holds FAF, and even me as a team member, it's basically a place where we can put up proposals and have discussions. So, and I can understand that if a proposal comes from my side, it's an important proposal. I'm not here to play with things, but really wanted to see what the community was, their head was, and what best can be done to make things much more aligned. I'm going to close my Discord because it pings constantly. But
yeah. I was just about to ask in Telegram. That's good. All right. Yes, perfect. You're absolutely right. The Flash Labs is kind of the proving grounds for proposals, right? So make sure that, and like Anas said, we've actually had community members bring up proposals. Doesn't always mean that we're going to, consider them or bring them up for a proposal, but it's really good to have the discourse, and it brings something that potentially could be broken to our attention. So even if the proposal is not adopted, it doesn't mean that it was useless. It does bring that to the forefront and allows us to see what the, temperature check for the community. So
Exactly. No. Even with the current proposal, like everyone kind of were signaling that the system is not that right, where you can just withdraw at 3% penalty, and while you are ahead, you will get the best revenue from Flash's 50% rev share. So that is very good. And we've had some suggestions around increasing the penalty, but we didn't feel well because you can never put a exact number on what the penalty should be. It could be 20%, it could be 50%, 30%.
It's arbitrary.
It just makes FAF bit more invaluable if you have a higher penalty. It looks like a kiddish game. We don't want to play that game. We want to build mechanisms that work really well and future proof our existence. So
100%. Yeah, and keep in mind, like the exit tax or whatever you want to call it, it kind of plays in favor of massive holders too, because obviously larger swings, easier to get out, and much faster to be in profit. So this is more fair for everybody as far as a linear unlock schedule. The AP.
Before we move ahead, if you can just summarize what we are going with the lock-in proposal, that would be great, even for the things that you do after this live session as well. Yeah.
The lock-in, the proposal as it stands right now.
Yeah. What we're going to do with it. Yeah.
So right now the proposal is basically we're going to go into Flash Labs and we're going to leave it up to the community to, again, another discourse where we're going to kind of talk about whether we want it to be 1 month or 3 month. And it's going to be a linear vesting schedule, which essentially just means you unlock today and the full unlock would be at 30 days. Or if we decide 90 days, then it would be at 90 days. So the full unlock would be at 90 days. You get access to all of your FAF. While that is happening, you also obviously still get access to RevShare. 50% rev share of the protocol. Like, that's serious. It's real money. I partake in it every single day. Obviously, I bought in. Team didn't get an allocation, guys. We bought in on our own with our own money, or it was an NFT that we had left over. So, or that we bought. I bought all my NFTs myself with my own hard-earned money. So everything I have is literally just mine.
You were not even working for Flash.
No, when I actually bought, I attended your Tensor, AMA that you had. I bought on mint day, and then bought more actually after. So yeah, I've always believed in the team. I built a platform called Flash Stats for the team just because the community wanted it. I've done a lot around the ecosystem, let's say. So yes, definitely I am all in, or I'm all bought in, I should say. So yeah, 50% rev share is serious, and we want to make sure the community also understands that we're taking it seriously. And this new mechanism really puts that forward. And we think, now the last choice here is really, 1 month to 3 months. So we'll have that out in Flash Labs here soon, if the community's not already talking about it as we speak, as I heard the Discord's tings going off. But yes, moving into the rising APY for FAF stakers. So as we were just talking about, this is RevShare. Day after day, it's exploding. This is actually a lot of it is FLP1 and FLP2. Does a lot of this come from Remora as well? This is also the Remora pool.
Yeah. As it stands, we are doing like 30% of our total volume is actually real world assets trading.
Yeah, it's crazy. It's
you can check on Dune right now if you want to show them.
Yeah, I can show you. Oh, mine's like, I do this weird thing where I zoom out on Dune. Let's see. I can show you on our Dune dashboard, which is super dope. I made it. Not bragging. Kind of bragging. Yes. All right. So if you want to go to our Dune dashboard, it has all kinds of different stuff, and I'm still working on it slowly, improving it, day after day, trying to add different features and items. So if there's something that you want to see added to the Dune dashboard, it is a work in progress, and we're always looking for input on what to add next. But you have everything here that you could possibly want. You have open interest. Go
Your
ahead.
screen is you're not changed in the
Oh,
screen share.
sorry about that. There we go. So yeah, this is what you'll see. And then you have all kinds of different metrics here. Anything that you could possibly want, everything from the FAF token to the FLP1 performance. Excuse me.
No worries.
Liquidations, pools, so all of our different pools, so you can see a breakdown. And I went into grave detail here to make sure that each line here breaks it down very simple. So yes, this is a great place to come and get that information that you really want. And then we also have our top ledger, which is another great place to see. Let's see, share this tab. Another great place. We're just trying to be, as open as transparent and give you all the data that you need for those who would like it. So Top Ledger also has a great dashboard here. This was put together by Anas. So thanks to Anas and the Top Ledger team. We have all the analytics that you could possibly want for sure.
Yep.
So yes, and then now moving into Anas's favorite segment of Flash Hour is what did we get done this week?
Yep. Yeah, the first thing is the FAFtarchy proposal. So we really wanted to see what possible things can be done, and I'm happy that we have some sort of final implementation details, and it's all because of the conversation that we had with our community, and yeah, we have things finalized, and we just need to get to the crux of it, where the linear unstake schedule, should it be 1 month or 3 months, is the main question that is remaining right now. We really want it to be 3 months, because the more the period, the better alignment and signaling is. And yeah, it's basically a linear unstaking schedule. Doesn't change anything. Whenever you want to stake, you can always keep staking and compounding your position of FAF to get more revenue. And whenever you click the unstake option, your linear vesting for that amount of unstake begins. And that is something that we are still keeping under discussion. And the second important, it's one of the most important launches of this month, which was the price impact fee mechanism. It's a very, very, very neat implementation that was built after understanding, that the Solana block production is not uniform. There are slots that are skipped, which makes things slower, or sometimes the slots are faster, which makes things faster, which is actually good for us. But whenever you have skipped slots, that is very problematic, because our Oracle lands the update slower, which might be a place where some people who are checking the chain very closely, they can come in and open a position at a very slower, older price, which could be at least 800 to 600 millisecond older. But since Zoeb was one of the lead engineers behind it, I would love to for Zoeb to add comments on this, on how it actually works.
For sure. I think one of the prime reasons we worked on this mechanism is to not penalize everyone and selectively kind of have this penalty for people who are trying to take advantage of the Oracle latencies. And I think we've tried our best to explain the proposition behind it in the post, and even added to the docs. And that is where the crux of it lies. As Anas explained, there are a lot of inconsistencies in the transaction landing services that we use, and we are not we're not validators or part of the validator network on Solana, which means we depend on a lot of things getting right in our favor to land the transaction. I think that is what everyone has been here kind of witnessed at some point. You try to land a transaction, you pay a priority fee, you try to get stake weighted QoS to your advantage, and then you kind of just submit your transaction and wait. And all of this is monitorable. Like all of it is in public. You have not just the Jito search kind of a system, but there are a lot of systems which allow you to check what happens before you can execute your transaction. So some people take advantage of the fact that Oracle transactions also need to land, and then they can predict what price comes in. And malicious actors do try to kind of play to their advantage, which now is prevented by this price impact fee, which is retroactive. It kind of checks if someone actually tried to front run an Oracle update and get a perspective or positive fill in their favor. So this kind of paves the way for us to have zero latency Oracle updates with our magic block integration, which is more or less a vertical integration of sorts. Like right now, we are stuck with horizontal scaling. As we add more assets, we need to kind of maintain the infra to update so many prices. There are so many so many accounts you can use in a single transaction. We are waiting for a few SIMDs to work into our favor. 339 has been live on DevNet. We hopefully have it live on mainnet, but 296 is still a few months away. And we're hoping like it could land on DevNet and people kind of start adopting it by end of Q1. But we can't just wait for all of those solutions to be live. So we've worked on these mechanisms, which also kind of help us with our future vertical integration with Magic Block, which, by the way, is also coming along really fine. As we isolate the scope and not wait for the full migration, we might have a few surprises on that scale soon. It was just about having all of the things done right with the current limitations that we play with, and I think it has had near zero impact on our usual traders or people who are trading on Flash without having a malicious intent of taking advantage of the latencies that do exist in the network as a whole. So I think no impact to normal users. People who are trying to game or kind of take advantage of latencies are being penalized in the right form. And it kind of also helps us work on the next issue of composability that we have had with FLP integrations. The UX has been a little bit deteriorated if you're trying to loop on FLP. They've had a good discussion with the loop scale team. We have action items to kind of make it possible to fit all of the required updates into a single transaction while leaving room for them to have their loan structures, their Flash loan structures kind of assembled and work in a backward compatible way. So we are also working on rolling that out, working with the team to identify improvements in UX, which should be live soon. So all of it coming together really soon, along with the addition of Forex pairs, which is an interesting thing that should be live this week, where you can long short other Forex pairs apart from the existing pound and euro coin. And I think that should pave a way forward for us to expand into a lot more interesting categories of RWAs.
Yeah.
Oh yeah, big time.
Yes. So yeah, I think we will be adding Chinese yuan and Japanese yen to expand our Forex offering, which are inverse Forex pairs. They are basically inverted pairs who are priced in USD rather than their generally how GBP or pound are, GBP and euro are priced. And then the idea is to basically have this 4 important set of Forex pairs and then turn on degen mode on them, and then basically attract more people who basically trade these pairs with the lowest possible fees. And even now, if you check the pairs that we have, Solana, Bitcoin, and Ethereum, these are offered at 4 bips price, which is almost 25% lower than Binance and Bybit as of now. And even actually, it's equivalent to, I don't know what the fees on Hyperliquid is. Is it 4 bips? I need to check that. But yeah, the offering that we have right now, the fee structure is basically no different than what other exchanges are offering, but it's actually much cheaper than centralized exchanges. And we are hopeful that things will get much more cheaper and much more interesting as we move towards the Magic Blocks implementation, because as the latency chops off, things can go much more faster. And if things can go faster, we can get much more leaner.
Yeah, 100%. The Forex stuff is pretty awesome. Let's see. I'm actually checking right now.
So
Spot, crypto, TradFi, trending. I don't even think they have Forex. So, interesting.
yes. So yeah, already we can see the rise of volumes that are happening on Flash regarding with metals and in equity sector. Now it's time for Forex to come in and as well, and then we'll see. I really want to see this day where real world assets are taking off more volumes on Flash than the crypto assets, but we'll see.
Yes, that'd be awesome. I mean, it's already kind of coming. You called it out again. I mean, just another forward insight that you had from whatever crystal ball that you look into. But Anas called out that RWAs as far as Forex, stocks, bonds, potentially bonds, I guess, those would overtake a lot of the crypto trading eventually, with like small cap tokens. And we're already seeing it right now, as Anas just alluded to earlier, is that it's 30% of the volume. So yeah, super interesting. And then cool thing is on analytics, hopefully you can get 24/7 stocks soon. That'd be awesome.
I think
And
that's going to happen very soon, probably in the next quarter or so. It won't go more than second quarter of this year. That everyone will have 25/7 equity markets.
yeah, the equity markets are super important because the volumes, you can actually see over the weekend, volumes fall off, obviously, because we have 24/5. But that's what really kicks up our volume throughout the week. So yeah, interesting to see that stocks, equities are taking off as much as they are. And by the way, Flash was the first on Solana. Just a little plug there, not to brag, but yes. So thank you to Remora for that. Let's see. Getting into the next slide. Oh,
I think
next slide. Nope.
Yeah.
Back up. Oh, what? The only thing we didn't say is what is coming. Is this? This is what
No.
did we get done?
Yeah, we removed that slide because basically we're gonna go with the FAFtarchy thing. So we don't have
Oh,
that.
darn it.
Yeah.
Oh yeah, that's right. I was about to say I did actually realize that when I was putting together slides. I was like, where'd the one go? But yeah, so there are a few things coming though that I actually really did want to talk about is the magic block update and then the funding mechanism and why it's so important. Like why even add it in the first place? We've seen some other platforms actually address this directly. So that's, I think, obviously we should do that as well. Why is a funding mechanism so important? What is the benefit for Flash Trade and, of course, Flash traders that are utilizing the platform?
Yes. So we could.
Should I take it? Yeah. All right. So
Yeah,
one, like with funding and magic block kind of both coming together. One thing that we want to make sure is the platform is usable not just for short-term trades, but for people who are waiting to hold on to the long-term positions, hold on to their positions for maybe a week or so. That's the good part on the trader side. For LPs, the benefit of having a funding mechanism rather than just a static method of the margin fee. So our current form of margin fee is similar to how a borrow lend protocol would work. You're using the platform's assets to lock up for your collateral or kind of for your payoff. So when you close, you don't need to wait for liquidity to come in. The locked liquidity would pay for your realized P&L whenever you decide to close. That comes at a cost because you're going to occupy the pool, and we don't want the pool to be occupied by like people who are not really trading, but just like sitting on the opportunity to lock up the pool and get into their positional trade whenever they want. So that is why the fee exists. Like we don't want people just holding the pool hostage and preventing volumes and other people from trading. So that has worked its purpose for 2 years. It's more or less a penalizing fee for you to hold the pool's asset for a longer time. We want to convert that to a system which is more gamified, akin to how perpetuals work on order books. Which is why funding is the central discussion of the reason we moved to even margin engine v2. And with funding, we've got to be cautious of not letting go of potential revenues which come from the margin fee portion of trades, which is right now less than 20% of the overall fee. That system complemented by funding would mean LPs have similar or better returns in terms of yield coming from fees by having zero exposure to, or kind of having the ability to get delta neutral. It all depends on the incentive mechanism playing out to its place, but the idea behind having the right funding structure would be to find delta neutrality for LPs, so they don't, so they're not barely exposed to price action in assets while making the yield, which means it's better adjusted returns in terms of Sharpe ratios, and you are kind of risking less and getting better yields, which in such markets, as we've seen over the last year or so, works out in your favor, where assets might go down, but if you're delta neutral, you kind of avoid the scenario to kind of have your capital deplete. And with the current state of yields on Flash, I think that system works out really fine. And as you have the asset basket exposure on your underlying always, you would still kind of find the upside when the tokens actually do go up in price. So funding is what brings it all together. And our Magic Block integration kind of makes a lot more assets accessible for traders. And LPs just find better ways to earn yield instead of being capped by the runtime limits and the number of assets that we can support on mainnet.
Yeah. I think funding mechanism, obviously, as you alluded to, really complements the Magic Block integration. So those two kind of work well together. And as Anas has said in the past, is that the funding mechanism is the wet dream of LPs. So they get that delta, quasi delta neutral. So
yeah, so this is like the first time anyone is doing this in this fashion on a pull-to-peer model. This is something that I really want to highlight, and we've spent actually good amount of time in figuring out what actually works best by going through the full analysis of all the trading history that has been done on Flash. And yeah, this is a very neat implementation, and the way we have worked out on the analyzation part of these things, we have seen how much extra money it made for LPs, and it also made money for traders who were trading the right direction as well. So overall, it's a net benefit thing for both traders and LPs, and we haven't seen this sort of mechanism live in prod until now. So I'm looking really forward to having this live on Flash Trade and see how much of an open interest it garners. Already, since we started with the Flash's V2 upgrade, we are seeing higher open interest on the platform. Even now, you can see most of the assets on pool 1 are having a very high utilization. So it's all because of the upgrades that we have done with the margin engine V2, that the traders are finding it much better for their trading things. And then LPs are also gaining a higher APY. Everything is out there. People can check. If you compare the open interest that we used to get before V2 and now, it's much higher. Utilizations are much higher. APY is much higher. And even the FAF rewards are getting higher. So yeah, all thanks to the margin engineer on working on the V2. And we look forward to adding funding mechanisms soon.
yeah, absolutely. The funding mechanism will be a large step forward, and it's peer-to-peer, as you said, and then like you said, the modeling is pretty cool. Since we took all of Flash's history and then modeled it out to see exactly what the outcome would be, that is super cool. It's only something that a platform that's been out for almost 2 years could do.
Yes, I think our experience of running the exchange helps a lot into forming better mechanisms to future-proof things. So yeah.
Yeah, 100%. All right. With that, that'll conclude Flash Hour for this week. Any parting thoughts or anything else you'd like to leave the community with?
Yes, we'll just put out the finalized form of the lock-in mechanism proposal for FAF stakers. And I don't think we need a few target market for that. We'll just do it off Discord if things work out very well. But if they don't work out, we can always spin up a proposal on MetaDAO. And talking about MetaDAO, the ownership move is also under works. It's almost actually completed. There was this legal structure that we had to migrate, and then they had to check if it is possible to do this. And since Flash is the first company that is doing this, like all other ICOs that MetaDAO had, they were new companies that started just now. But Flash is a company that is already established, already profitable, and already had an entity. So there was some things that they had to figure out, which has been figured out. And we'll soon get some interesting news on that.
Heck yeah, man. Ownership tokens. Let's go. Or Zahib, before we exit here, did you want to add anything else to it?
Not much. Just keep an eye out for updates. You should have more markets to trade and a lot more interesting technical updates from our end coming this week.
All right. Sweet. I'm going to remove you both. Well, thanks, guys. I appreciate you tuning in to this week's Flash Hour. Interesting update, too, as far as the janitor and Flash trade is we are going to be attending DFDV and Marty Party's Breakout. And we have been working with them to also bring in some other aligned partners. So it should be a really awesome, it's going to be a virtual conference, February 10th through the 13th. And we will be in there, I believe, the very first day, and then look for some special appearance from the janitor. And of course, Anas will be there. Zahib will be there as well to discuss Flash trade. But we'll be making some special appearances on some conference. So that'll be really cool for everybody. Don't forget about the proposal in Flash Labs. Let's hash it out. Let's get to a consensus, blockchainy. And let's get this implemented so that we have a better environment for FAF stakers for everybody. And those who are not staking FAF, what are you doing? RevShare, 50%. It's pretty awesome. It's huge. We've got some major things coming up: funding mechanism, ownership tokens, and of course the magic block integration, as well as many other features rolling out between Forex, stocks, RWA style things coming to the Flash Trade platform. And if you look at pool 2, you can see our flu mechanism is working perfectly thanks to Zahib's beautiful engineering. With that, I'll leave you all. And as always, I'll see you in the markets.